Alright, welcome back to the 𝐃𝐢𝐬𝐝 Crypto and Bitcoin Trading and Analysis Show. Welcome back to the 𝐃𝐢𝐬𝐝 live show. This is Thursday, May 5th, and we're going to start off with Bitcoin, look at Ethereum, why Ethereum actually is a little bit more troublesome looking on a macro scale than Bitcoin at the moment. However, why they're also in a similar positioning in terms of origin lines, which are essentially parallel lines that start off from the beginning of time for that asset. They're both in a pretty hairy position right now, and then we'll move on to the questions that you might have in the over in the live chat. And what I'll do for the questions, you can start stacking them on a little early, but I will try to first get to members and super chats, and then I'll try to get everybody else's questions. So let's dive in. Check. Thought I'd give it a quick microphone check to make sure you all could hear me. Looks like you can. All right, let's get going. I'm glad I made a YouTube video yesterday saying, hey, even though we had this pump here, things are still more likely to go down. So I'm glad I made that video. However, I was kind of thinking that price had a better chance of breaking out of this little micro. So this is a micro range, right? And the way I break down tools, as most of you know who follow me, I like to do use a set of indicators that are some primary indicators for me. And EMAs are within those indicators, and stochastics and RSI. However, I mix it with particularly structural analysis, especially when times are choppy. When movement is a little bit more unidirectional, especially to the upside, I use a lot less. Structural analysis, because the EMAs typically in my indicators allow me to see things a little bit more clearly when buyers will stop being buyers and turn into sideliners or sellers. During this market, I'm leaning this current choppy market, which is mostly down, but is still pretty darn choppy. I'm relying pretty heavily on structural analysis, so it is a different type of analysis, and we'll mix them together here. But for now, I'm relying on structural analysis, which I usually don't, but I don't know. That's the flavor of the month for me right now, and I'm liking it, and it's working. We saw yesterday that price came to the top of this range with a lot of momentum, and we'll zoom in here. So that range went back to early March. I'm on the 1 hour chart, and not a single hourly candle closed above that top line. And when price was dancing around here, and it started slipping, I think it was just before this candle. Yeah, it was just before this candle. I let my Discord community know, and my Cryptillion tier in the YouTube tiers, that hey, none of the candles closed above, just for a little bit extra confirmation that the pressure might be a little bit down. Although during a live call, somebody did ask me the specific question, if I had to make one guess, what would happen? My one guess was, because of the amount of momentum this had, I was thinking it was going to hit at least the weekly 10. So if I had to make one single guess, that would have been my guess, that it hit about 40,590, and then essentially become a failure. So there are two types of ways that resistances play out. Taking off that 10 EMA, again, two types of ways resistances go. Either you get rejected perfectly like this, or you fail it, which means it goes above. Then when it comes back down, it can't hold on to it. Doesn't ever use it as support. That's a failure. And sometimes, you get a rejection and then a failure, and then you head back down, right? I was anticipating a failure first, and then maybe a rejection later to make a lower high situation before it came down. But instead, this became a rejection. And as you can see here, this is why I keep saying, even though I'm not on YouTube, I'm going to try not to give too many analyses on traditional markets. Let me go to the 15 minute here. Let's see when Bitcoin started sliding down. So the momentum to the downside started really right here, okay, on that candle, and that's at 9:30. So let me make myself a little bit bigger. What else starts at 9:30? The traditional markets. That's when the candle of the spot trade opens versus what has been happening all night for the futures of that same index, right? Let me put myself back on which one? I'll move myself to the left, I guess. All right, now I'm way up here. So that's when it started slipping. This is why it's so important to, at least from any perspective, to keep your eye out on a couple traditional market indexes or indices. First one is NASDAQ Composite, which this IXIC ticker, as you can see behind here, it doesn't trade for many hours of the day, right? So it closes, and that's why you have these big gaps. But the futures of it in Q1, exclamation here, this trades 23 hours a day, 5 days a week. So it's a 23.5 is my understanding. That might not be 100% accurate. There might be exceptions to that, but I think that's a very mostly accurate statement. And so let's see, 9:30 was when Bitcoin started heating up, right? Where did it start heating up here? I would say either on that candle or that candle it started heating up. Is one of those candles the 9:30 candle? Look down at the very bottom of my screen here. What does it say in the gray? So it's to the left of the blue thing at the bottom of my screen. I think you could see it. It says 9:30. So Bitcoin started sliding exactly when this index started sliding. At exactly 9:30. This ticker, this is essentially just like altcoins move with Bitcoin, for the most part, with exceptions, right? So most altcoins, maybe besides Luna, although Luna at times does move with Bitcoin, in that same exact mentality. Altcoins move with Bitcoin. Bitcoin moves with this. This is pulling almost all the strings right now, because Bitcoin is not trading per its intent as a safety net for inflation. It's not trading like what gold would be doing. It's trading like a risk on asset, a risky asset. So it's trading with NASDAQ, which are the riskier assets. It's very unfortunate. I won't do much analysis on this. I try to get a tip off my community on that kind of stuff. So if things to that effect are things that you want to check out, then the Discord community, the links are in the description section, or you can join the Cryptillion tier. Link to that, you can hit the join right below this, any YouTube video, and I describe what the tiers are, what they offer within YouTube, and then also make sure you follow me on Twitter, Closest Better Days too, if you're not following me already. All right, get my spiels out of the way early today before I forget. All right, speaking of that, I finally got some freaking sleep last night. Oh my gosh, been struggling to sleep recently. So if I seem giggity here, it's probably because I slept well for the first time in, I don't know, probably 5 or 6 days. All right. Therefore, I'm not going to give you straight up analysis on this, but I'm trying to show over and over and over, if you're not using, particularly this ticker that you can see here, NQ1 exclamation, save it to your watch list for your own analyses, and you can, apply your base knowledge on price, direction of price, and your typical analysis on this, and then apply that to crypto, because it's going to apply most of the time. I will be there are some cases where Bitcoin does something totally different. Moves literally up almost every hour for every hour that NASDAQ goes down. For a couple days at a time, Bitcoin can move up. And there during the Wyckoff experience in late May, early June of, let me go to the 4-hour chart to see this. During all of this, Bitcoin traded opposite of the market. The market was generally going up this whole time. So this is a late May, or the May 10th, and then the big drop down to 29K. All of this happened when the traditional markets were generally up. So that was a months and months long exception for the most part, right? That was kind of an outlier though. But oftentimes you'll see down to the 5-minute candles, Bitcoin moves with that ticker. All right. However, I'm not going to provide analysis on the traditional market indexes, or indices, plural index, on YouTube for now. However, we can see that price is staring down my box that I made about, I don't know, a week or a week and a half ago, maybe 10 days ago. I should know the exact date, but I don't know when I drew this. It looks like price is eyeballing it, and I think I made a line yesterday for the YouTube video, or maybe even my daily update yesterday, saying that until price gives up all of its run from yesterday on both the traditional market and the NASDAQ index and Bitcoin, so about right here was the daily open. Until that happens, if Bitcoin gets rejected or fails this line, there is a possibility of a higher low. So just keep that in mind until it crosses that line. Now, if it crosses it, you don't even need a closure below that line. So when you give up a whole run, you honestly don't. Closures always help, but you honestly, like a 5-minute, just even a wick on a 1-minute candle below there, it gave it all up. And waiting for closure is always safer. However, for this type of analysis, I would say even a 1 minute, like 1 second below this line, I think that pressure, you can confirm high probabilities that this box will be hit, that it's gonna tank through, and it'll at least hit the bottom of the point of control of this micro range. So what I mean by point of control is this is the bottom, this is the top, this is the point of control, the middle, the green. So it's like a road, and this is just a line instead of a road. So this is the quarter line and the 3/4 line, right? Top, bottom, point of control. So it looks like it needs to at least come down to the point of control. Given that it failed this, before you can get a good bounce, you usually need to come back to the point of control, typically within a range, whether that's a horizontal range or not. And my initiation for when the probabilities strongly flip in that favor of coming down to 36.4, 36.5, about 36.5 at least, or lower. So it could be 36.5 or lower. The moment that those probabilities flip strongly towards that direction is when just 1 minute is below the daily open of yesterday, and on spot on spot trade as opposed to futures, trading futures. On spot, the open was 37,735. So that is the magic number, 37,735. So you could essentially set an alarm for that, 37,735. And that's at least on the Bitstamp exchange. So 37. Yeah, that would be actually a pretty good opportunity to set an alarm. And a lot of times the daily open lines are battled. So you'll often see that buyers step in here, and that's when you get your bounces. So if you see it wick below and bounce, that is potentially a good short setup in shorting into a lower high before it then hits, more downward targets. A lot of times, so you'll see the more often that you use this trick of marking off a daily open or even a weekly open line, you'll see that price really does play with it. It's defended quite a bit, and there are a lot of algorithms and or actual real people trading who are looking at the previous day's open or the current day's open, and price often flirts around with it quite heavily, particularly when you dive down to the 5 minute chart. You'll see a lot of movement on this, and I'm not for sure how it'll boil down. It could go below it, then come up and go bam, or it could come up short and then do a lower high, then come down and try to use it as support, and then maybe then break down. But you should see a decent amount of activity on the very low time frames, and see how much this is respected, at least in regard to some groups of different traders, whether it's people programming algorithms and robots to one thing to concentrate on daily opens, or it's a set of retail traders, human beings who are trading in regard to or whose trading is influenced by the daily open of the previous day. So that's a little trick for you. And until that happens, though, I think Bitcoin does have a chance to make a higher low, but this is pretty aggressive. So you got to take that with a grain of salt. Had this dribbled down here, I mean, yeah, okay, that could be one big bull flag, right? So therefore, the probabilities probably don't really flip until you actually do cross that line. However, with this really aggressive move, you could take that analysis with a grain of salt. It's possible that the probabilities already have flipped to the downside for 36.5 to be hit because of that strong momentum and that strong rejection. You could analyze it that way. You could say, yeah, it probably doesn't even need to hit that line because it gave up this horizontal right here with all of that momentum to the downside. You would have to backtest this, though, right? You'd have to get at least a sample size of 20 or so. And I have not done that, so I don't want to, but I would take with a grain of salt because of this momentum. It is possible that if you look back in time and get 100 sample sizes, that the probabilities have already flipped to the downside, but I cannot confirm that because I have not done that exact type of measurement on something like the 5 minute chart versus daily opens. I haven't done that. I backtested a ton of things, but not that particularly. So keep that in mind. The probabilities could have already flipped because specifically this the volatility and momentum of this move so far. All right, and let's take a look at, I'm going to show you something on Ethereum here. So again, I'm targeting at least 36.5 or lower. I think that is the most probable next target, perhaps with some bounces along the way. Like I just said, a 37 at the daily open of yesterday could get some bounces. You could stop here, make a lower high, or you could stop here and come up and hit the weekly 10 and then fail and then come back down. right? That's possible too, because it hasn't crossed this. But I would say that coming up to the weekly 10, which is right there, so it would be about right there at the time, I think that, because this has moved down so fast, it might actually be less probable at this moment already, and 36.5 might already be locked in as the more probable. 36.5 or lower might already be more probable. All right, let me show you what I'm gonna. Let's compare Bitcoin to what I'm going to show you on Ethereum. That is really, really concerning for me. If I could stop fumbling with my computer. Origin lines. All right. Folks 25 and younger, you won't understand this, but right when I was clicking my object tree, I felt like a Power Ranger. I felt like I was like, origin lines, go! Felt like a dang Power Ranger there. Power Ranger analyst. Or Captain Planet if I start mixing tools. Like, you know, we got origin lines, and then we got our trading channel with our powers combined. I, Captain Bitcoin Planet. All right, so origin lines go. All right, Bitcoin. Sorry, I'm being goofy. I told you if I act a little giggity, that's because I finally slept. This is the most important straight line in all of Bitcoin price history. Okay? And I think I'm the only person out there who calls it origin line, because I stole that word from an analyst who said it just randomly back in late 2017 or 2018. He might be actually the first Bitcoin trader analyst on all of YouTube, honestly. But it is the most important line in Bitcoin price history out of 12 years. And Bitcoin, historically, every time but once, when price is under the line, it's been a great opportunity to buy. There's another YouTuber, a crypto YouTuber who's been around a lot longer than I have, who calls it the golden zone. So he essentially has a different tool that seems to align pretty closely with my origin line. For some reason, it just aligns very well. And he calls it the golden zone. All right. So Bitcoin is it's kind of a nice terminology, because it makes you realize when price is below there, it's a great buying opportunity. Should you buy right there at that moment? Maybe not, because honestly, things could capitulate pretty far down. However, if you were to buy under that line, 100% of time in all of Bitcoin price history, it's been a great opportunity to buy when you look back 3 years. So really, now, is that true for altcoins? No. Is it true for Ethereum? I don't consider Ethereum an altcoin. It technically is, though, but I don't know. It's just too good to be an altcoin. And I don't think anything else could say that. Luna's getting close, though. Luna might just be called Luna. It might be a Bitcoin, Ethereum, and Luna, then altcoins. It might be in that category soon, but in a few years. However, all times but coronavirus, I think March 2020, this has been the time to buy. So this was Bitcoin at $3,200 back in January 2019. It went down below the origin line, almost the same posturing. However, it never got this low. So let me go to, I think the 2-day chart allows me to see all of Bitcoin price history. This is from my Discord stuff yesterday. Okay, so you can see here that you can see the origin trading channel here, right? So all the blue stuff. So that's the origin line right there. You can see here price barely went under it during this capitulation of the bear market of 2014 to 2015. So that's 2014. This is 2017, 20K top, and it capitulated on November 14th and then in January finally bottomed out at 3,200. And I'll zoom into here in just a second. This is coronavirus. You can see how it's the only time it significantly went under, right? And it hit the next origin line down. It hit the next one down, only one time. However, with this lower top here, so you can see that this top hit that line. This top hit above this, or let me take all this off. You can see that this top went above all my lines. This top hit the exact one. This top was even lower. So with lower highs on this chart, you might also expect, and this is part of the origin wave theory. I keep linking people to that video that I made in early December, late November. I keep linking people to that video. I'm not for sure if anybody's watching it, or if I don't get enough new viewers or whatever. I'm trying to tell people that there are lots of ways to justify and create an analysis that Bitcoin, because it's making lower highs on this chart, it should technically You know, its lows, it's bottomed out. It should be lower and lower down here as well because the highs are lower. And over time, even if this line were to be used as resistance, okay, let's say it never gets above that line again. Who the hell cares? Look, let's say it capitulates all the way down to freaking this one, like it wicks down to 11K, and then comes all the way back up and then lives its entire life under this line. That's still 384,000 by 2024, by the end of 2024. That's almost 400K. And that used to be the mega support. So if mega support becomes mega resistance, who the hell cares? We're still going to be able to have altcoin seasons. So if you can justify that, then it's very possible that the lower end targets of what we're looking for during this bear, I think it's safe to say pretty much bear market for Bitcoin right now, for this bear market, it might be origin lines, it might be not the master origin line, but the target might be 1 or 2 down or 1.5 down. Because that master origin line could be resistance. And that means if it turns into resistance, the low of this cycle will be multiple lines below that. Am I making sense here? Because of A, then B is reasonable, essentially. And so we already looked at A, which means the master origin line becomes resistance. 400K top in 2024 sounds reasonable. It could easily happen. It's not out of the line of scope. So because A is reasonable, then B is reasonable, and B is, then the low should be a little lower down on this chart if that's going to be resistance. It's not just going to float there and be resistance forever, right? It's not going to turn into a stable floating coin up like that. Most likely. So let me get rid of some of these drawings. All right, I'm going a little bit too much in depth on this than I planned. However, so that's Bitcoin. So this is the master origin line. Ethereum, I wanted to compare this to Ethereum, but so you can see that Bitcoin's already below it. Actually, I forgot to do one thing before I go to Ethereum. You can see Bitcoin's way below it, right? And remember targets that I've been giving in my recent analyses in regards to like the weekly 200 simple, weekly 200 EMA, and my channel with the monthly. I keep saying Bitcoin's either going to hit around 21, I don't know, 21.3, maybe as low as 18, 18, I don't know, 18.5, something like that. Because I don't think 20K will be hit exactly. There's going to be too much action there, and there's going to be too much faking out. So if 20K is really the target, it's either going to come up shy so people cannot enter longs, or it's going to go a lot lower to get longers, people who are longing 20K, to get them out, to squeeze them out, essentially to stop them out, and then it'll go up. It's not going to hit 20K exactly. Could it? Yes, but it's just it's probably the most improbable thing out there. There are going to be too many orders, and people with money are going to play with that, are going to mess around with it, and it's just very unlikely to happen. So with that, taking a look here, that would essentially be a wick past this origin line, come right back up, use it as support. And this origin line right here, if things were to capitulate, let's say this month, and capitulate hard, no, that would actually be going, so that'd be floating down till June, till the middle of June, and a wick below would put you at the 21.4 area. So it'd be coming up just shy of 20K. If it were to use this origin line, so this line, one full one below the master origin line, it would be a wick below the next origin line. Could things dip even lower and almost hit the next origin line down, which would be more in the 16Ks? That is possible as well. It could stop in the middle, and then come right back up and get above this this origin line here. So the origin line chart that I have for Bitcoin is supporting the idea that it's going to stop shy of 20K. It's definitely supporting that idea a lot more because of so this would be my 18.8 if it's driven just below it, just below 20K. That's awkwardly in the middle here, and Bitcoin likes to respect these lines, particularly in really volatile moves. So this is giving a little bit, so it's supporting the theory of 21.4. I'm going to go to Ethereum here really quick. But look, this was coronavirus. What line did it hit? The line that I'm telling you about that would align with 21.4. It would be hitting the same line. You see how it respected that line? It didn't stop in the middle of two of them. It hit that line exactly. Right? When did Bitcoin capitulate for coronavirus? Right at the origin line. That's when it heated up. Boom, because it failed this line. See, I've gone over this a million times. Look at all that support. Look at all that support. Right when it failed it, kablam. Bitcoin is way under it now, and it still hasn't capitulated, which it's hanging on by just barely. All right, so Ethereum now, with that in mind, I have a couple. Here, I got to take a sip of Finally caught it live. Good. I shorted. Oh, no. Well, don't. All right. GG444. I know you don't have a question, but I will address 50x leverage here in a second. Hopefully you're joking, but I want to address that here shortly about using more than 5x leverage, really. All right. I have a bunch of origin lines here for Ethereum. As of now in Ethereum price history, there's not one master origin line that's way more important than everything. And if I could give candidates for what will turn into that, I would give the candidates either that line or this bottom line. That's why they're both thicker than the rest. So for this on YouTube here, let me make this a slightly different color. Let me make it a little lighter. That's too light. There we go. One of these will likely go down as the master origin line. I would guess the bottom one because Ethereum's price has been so aggressive. And again, if Ethereum were to use this as resistance the rest of time, it's still going to do really, really well. I mean, hell, by the end of 2024, let's say, drag it up there, that's still 31K. By the end of 2024, if it were to never get above this line again, and really, a little over half of its trading has been spent over that line. So here and here is roughly, it's about half. It's actually almost an even split, isn't it? So that might be the master origin line then, if it splits the trading in half. Actually, that might be the most important line already then, if that statement's true. Yeah, that almost is a perfect mix. Huh. I've never noticed that before. Okay, sometimes I discover things live, sorry. And then I marvel at it. Looking at charts is fun. As long as you make it fun. All right, so actually that helps me out here because, all right, let's label this the master origin line then. Because this will align a lot with what's going on with Bitcoin. Look. Let me zoom way in here. Let's even go down the 15-minute chart. Okay. You realize that this line goes back to the beginning of Ethereum's price history, right? This is why origin lines work. It goes to the beginning of time of Ethereum, and look at how even the 15-minute candles respect this line. It's magic. I don't know what it is. My theory, a couple of my VIPs in Discord, they have the theory that the angle that I match on a lot of these altcoins that I graph out, or Bitcoin and Ethereum, the reason it works because it aligns with fibs. The angle, for some reason, hits fib lines. So it's almost like a fib channel that I'm accidentally creating. That's kind of the one working theory of why these work. I don't know why they work, and personally, I don't care. All I want is a set of tools that work. To explain it later, maybe explain it later, but honestly, it doesn't matter. It only matters that it does work, and it gives me a statistical edge, and the why really... It's good to understand the why, because I make fun of, I've poked sometimes at purely pattern traders because I feel that they're missing the why of why things work. Therefore, understanding the situation of when you actually do have an edge for a specific formation or not, I feel it's underlyingly, missing the why. So the why is kind of important. However, so I just kind of justified pattern traders by I don't care why. I just care that I need an edge, which is reasonable. All right, so take a look at this. Watch. Now I'm on the top right. Okay. I mean, zoom into this 15-minute stuff. I mean, just look at this. Let's go to the 5-minute. This line goes back years. Look at this. It's almost perfect. And you just got a straight up rejection from it. And that's the master origin line. This is bad. And do you remember the coronavirus dump? When did it happen? Right when price failed the master origin line. And Ethereum just did it. And Bitcoin's already doing it and hanging on. So now that Bitcoin's partner, its partner in crime, right? Its buddy also failed it. They're going to jail together. And the obviously this is being led by traditional markets, but in the future this could be called the I don't know if I want YouTube to like kick me off because last time I said Russia Ukraine, but this could be the Russia Ukraine event instead of the coronavirus dump. It could be Russia Ukraine dump, right? It could be labeled that in the near future, but it doesn't matter. It's in the charts. It's in the charts. You can see the news in the charts. Just like before it was called the coronavirus dump, I could see that Bitcoin failed the master origin line and it's going down. I already had my orders at my limit buys at 5K. No, already having the analysis of 5K in the charts before coronavirus was a thing. All right, so this is really looking bad. Both Bitcoin and Ethereum have now failed, or no, gotten straight up rejected and have fallen below their master origin lines. This is looking pretty bad, and this could be a case, where Bitcoin and Ethereum now, if traditional markets try to recover, this could be. I'm going back to Bitcoin chart now, though. This could be a moment where Bitcoin and the crypto market then starts to lose ground versus traditional markets. And if traditional markets like float sideways and make lower highs and do something like this, crypto will continue going down. Just like in most bear markets. Most bear markets outside of March 2020, Bitcoin on a percentage basis way underperforms traditional markets as traditional markets are slowing down and generally recovering like this, but Bitcoin goes way lower in a mild downturn for the traditional market. Outside of March 2020, they all capitulated and went down aggressively together. And moved up together as well, for the most part. But outside of that, the other capitulations, they happened differently. And crypto underperformed and moved down much more rapidly. And this could be the initiator, folks. And I've been warning you about, May 5th, May 6th, after the Fed meeting, this could be the moment where you start seeing capitulation. I'm not calling this a capitulation candle. I don't want to scare anybody. However, looking back in time, these are the evidences that it looks like it's about time. It looks like it's about time. So hopefully you're holding tethered and, you're not you have lower end targets for where you want to buy, assuming that you're a person who's been here in crypto for a while and you're still here. That means you made it. Like if you made it this far, the likelihood of you giving up before next altcoin season, which could be 2024, it's actually my personal guess, 2024 until next altcoin season. If you made it this deep in, you're probably going to be here until then, with the idea that you've watched me say over and over, capitulation is probably going to happen. It's still probable. You're, even if you don't believe me, you're still expecting it to some degree, right? You have it in your mind. So if you're still here, you're going to see some glory here in the next couple years. So, all right, I'm going to go on to questions, but I'm going to start off with GG or whoever's talked about 50x leverage. All right. How could I do this without making Discord community feel that I'm giving away too much information? How about let's do the 4 hour. No, I'll do the 1 hour chart. Actually, I will do this, and I'll throw back on. So Power Rangers take off their origin lines, and Kosa channel, micro channel go. All right, let's go down to the 1 hour chart. So the reason why using that much leverage on very volatile assets is a bad idea is over time you will lose money. There really is not a humanly way. I mean, there are probably exceptions to this, but I would guess that if you had 10,000 people who knew how to analyze price, so you took 10,000 people who knew how to analyze price pretty well, but they've never traded. So they've analyzed charts for over a year, but they've never actually put money on the line and clicked actively. Maybe they've dollar cost averaged or whatever, but they've never actively traded. It doesn't have to be day trading. It could be anything. But you take 10,000 people in that boat, and then you make them trade on 50x leverage to try to implement their analysis within trading and do their own research or whatever, because analysis and trading are they're about 80% different. Technically, in trading, you actually don't need analysis if you have basic rules, but the analysis helps you understand when you have an edge a little bit better. Anyway, if you take those 10,000 people and then you take another 10,000 people who trade Bitcoin specifically, who have analyzed for a year the same boat, so 10K similar people who have also studied charts for over a year, never traded, and you make them trade on 3x leverage, and they make at least one trade a day for over a year, this group of people will have made more money. And if in that hypothetical universe, you could run that experiment with 10,000 people You can run it like 100 times. It might be close to 100 out of 100, at least on a volatile asset like Bitcoin. It might be 100 out of 100 times that the 3x leverage that group makes more money than the 50x leverage. It really might be, and there's a reason for it. I'm taking this very seriously because you won't make money over time. It's almost impossible. You're trading against high frequency traders and algorithms. Like Bitcoin is. It's traded by bots. You're going to have, that's why it's so much easier to trade altcoins during altcoin season. You make so much more money than you can on futures because you're trading against people. And most of those people don't know what they're doing because they're new. It's so much easier to trade altcoins during altcoin season than Bitcoin. However, 50x leverage, what it does here, or too much leverage in general, I mean, hell, even 10x leverage. Let's say that you took on a short right here at this wick high, right there. Took on a short. If you zoom in here, price did it. So because you did 50x, that 0.15% above, even though you perfectly got that wick, that 0.15, if you're a person to set stops, which I assume you would, your stops have to be tighter to where you enter. They have to be because your liquidation point is so much closer to your entry. So you have to get out way earlier because you're going to lose, with a 0.15 move on 50x leverage, you're probably losing, you're probably at a 30% loss, maybe 20. I don't know the exact figures, but you're probably deep into loss. If price goes 0.15%, I don't know the exact figures, but you're probably pretty deep into loss. I would guess 20%. And you can't over time, and I can say that truly, if your average loss is, 20%, and you're allowing yourself to get to 20% loss during trades whether it works out or not, you're going to lose money over time. So that 0.15, you have no wiggle room is essentially the way I like to say it to my community. You don't have wiggle room, and wiggle room is good. You need wiggle room. That's pretty much it. Now with 3x leverage, your stops would be like a whole percent above. Your stops are way up here. You have way more wiggle room, and you would have made money. Because and with 50x leverage, you don't have that opportunity. Now, could you have said my liquidation points here? I know it's going down, so I'm shorting here. I know it's going down, and take a 20% loss, and now you're in profit. Yeah, you can get lucky once or twice or 3 times, but over time you will lose it all. You'll lose it all. And if you get lucky 3 times in a row on 50x leverage, that's probably the worst thing for you because then you'll be addicted to it, and it's going to be really hard. Oh, it already hit my box. Wow, look at that crap. When the hell did that happen? Okay, well, it hit that. See, look at this line, folks. Look, didn't I say it was going to hit the bottom of the point of control? There you go. 36.5. Look at that. That's cool that happened live. And that's the line. I'm telling you, these lines work. These trading channels work. And that's why I'm begging folks, please pause the video and put these lines exactly how I have them. This is not, TA is not... Sorry to involve gender here, but it's funny against men, so hopefully that's allowable. TA is not astrology for men, which honestly is a hilarious statement. I think it's really funny. It's one of the funniest, wittiest things I've ever heard about trading and TA. I hit that line exactly, almost to the point. $12 off. All right, well, cool. So my box was hit. Interesting. And we could be staring at the beginning of capitulation. It's totally possible, folks. Could be, but I don't want to scare you. All right. I have blabbed long enough, so you know my opinion. I mean, my box has been hit. I guess I already said, it might already be more likely. So now that the daily open has been broken, I mean, obviously downside is much more likely at this point, right? With the acceleration to the downside like this. So you could get an aggressive lower high here. So this probably is not a great time to long. It gave up yesterday's run. The pressure's way down, folks. Pressure's down on the higher time frames and the lower time frames. So longing this and staying in and long, waiting for this to bust out is horrible. Longing this, looking to be selling into a lower high to get out of that long here, that's an okay trade. However, I typically don't like to trade that much volatility. I wait till it cools down. I've never had luck trading in super high volatility moments. It's just over time. It's not profitable because the wiggle room that you have, it's typically hit and you get stopped out too much, and it's just so much easier to trade when you have a setup. And that typically setups don't involve that extreme volatility. But I guess if you're a horizontal, I mean, if you traded that line perfectly, I guess that would have been a good, I mean, hell, you'd be up. On 5x leverage, you'd be up 10% already if you just had limit orders, limit buys right there. However, I typically don't trade that way. All right, let me move on to questions. So that was a really important comment about leverage. You simply don't have wiggle room, and I'm telling you, it could be literally like if you did that hypothetical experiment with 10,000 people, it literally could be 100% of times the 10,000 people in that boat with only using 3x leverage. It might actually be 100% of the times out of 1,000 trials or 100 trials or whatever that group makes more money on average. All right. Specifically on assets that are volatile. If you're trading that on, gold during downtimes or forex, currencies that don't move on a percentage basis nearly as much, yeah, you need to use 50x leverage on things that don't have much volatility, right? Because you can't make money without that leverage, and you do have the wiggle room because it's less volatile. So, but on Bitcoin, it's just a bad idea. All right, let me see what we got here. Carl Hungus, okay, got it. Yeah, Carl's one of the team leaders from my in my community. So what he says, he automatically pretty much gets thumbs up from me until proven otherwise. Yeah, Carl's he's really into it. Okay, Darby Crash. Thanks, Darby Crash. If you have if I see, maybe I'll scan for a question that you might have somewhere else. Darby. Oh, I got a few Discord folks in here. All right, we got so also Small is one of my Discord leaders as well. Yeah, so they're talking about, so Carl's given some, I'm not really for sure what the conversation is, but about Tether. Tether's a little bit dangerous, but it is the most traded cryptocurrency in the world. So therefore, it is the most popular cryptocurrency in the world. If the parameter is the amount of dollars in and out, so the volume trading, and that equals popularity, under that strict parameter. So as opposed to popularity is if you did a survey and the number of people who've heard about it, okay, it probably wouldn't beat Bitcoin, right? It wouldn't be the most popular, but in terms of action and money, it is by far the most popular cryptocurrency in the world. So regardless of any scares or whatever, it's kind of a fun fact. All right. Let's go. I don't think Darby Crash did a quick super chat. I don't see any questions from you. So if I see your name, Darby, a little bit later, I'll try to. Why Tether? Okay, so I guess Darby's talking with Carl. So all right, let's take a look. Message retracted, Andre. Okay. Uno buy target. All right. So I have a YouTube tier member asking about Uno buy target. Ugh. So this asset simply came out at the wrong time. It came out 3 weeks before the Wyckoff stuff played out. And then it actually made a higher high on a weekly closure at Bitcoin's 69K top. That's pretty good performance. Not even Polkadot was able to make a new all-time high when Bitcoin did as well. The majority of altcoins did not. So, coins that did really well in the run-up, like Telcoin, they didn't make a new high here either. That's just the average of coins that did pretty well. So that I like that. I like that it was able to make a new all-time high on a weekly closure basis during the second run. That means the community, like during this, wasn't scared off. Therefore, if the community of Uno was not scared off during that time, then therefore, even though they're not buying now, once it is ready to buy, it'll probably, I think it has a stronger chance of going up faster. Because what I'm seeing community-wise in the charts. So a lot of times you can see news in the charts. Well, I can also see sometimes I can see fundamentals at play in the chart, and that is one thing I like. So keep that in mind. You can use that rule of thumb. Just look at where May is and look at where November is. If May on your altcoin is higher than your November, that means the community of that coin simply did not become buyers again the second time. That's what it means. So therefore, if they were scared out this time, well, they're probably scared out this time too, and you're probably not looking at a first mover. So that's kind of a trick for you there, a rule of thumb. I like that. Buy targets. That wasn't your question though. It depends on what time frames, what you're looking. Buy target for holding. So I'm going to assume that you want to DCA into this, as opposed to buy it then sell it within a week. For looking for a quick flip. So well, if you are looking for a quicker trade, I honestly would try. I would try this area here. I don't know if it's tradable though. Let me do it on a percentage. I would try putting some limit buys around here. Oh yeah, that's definitely tradable. Heck, wow, this is really volatile. Huh. That is way more. Wow, that's super tradable. Yeah. So I would put some limit buys between these two areas, between 1232 and 1313. 1232 and 1313. I wouldn't put all my money in that basket, but I would try to pick it up between that level and then sell as it comes up and gets rejected by that line. That would be like a 20% trade. I mean, yeah, that's a 21% trade. So for a shorter trade, that's how I would roll with that. But for a longer DCA stuff, I mean, honestly, this looks like it's going to make all-time lows. So if for something that you want to try to catch during a capitulation, I would be buying at 0.085 and lower. Honestly, and this is where a bearish fib retracement tool might be useful, so you can look at lines and where all you want to do is you want to try buying at levels where you feel other buyers would step in to buy, or levels that would align with, if Bitcoin does this, then my coin will go down a certain percentage slightly more than Bitcoin, and that's probably where people will start buying as well, right? It'll align perfectly, so as Bitcoin bounces from whatever downside it has, this coin will likely bounce somewhere around here on a percentage basis. So if Bitcoin goes down another, 30% to hit those targets, this would probably go down, actually, let me measure here. So I'm giving you two different answers for your one question because I don't know what time frame you're thinking. If Bitcoin goes down to 21.4, so that's over. So that's 43%. And then Uno would probably go down 60 to 65% if Bitcoin were to hit that target of 21.4. So you could simply do this. Watch. I would put it at 65% lower. That's 0.05, so 5 cents. That's probably where I would be interested in dollar cost averaging. So I'd put some limit buys at 5 cents, 5.1 cents, 5.2 cents, 5.5, 5.6 cents. So that'd be 0.05, 0.051, 0.052, so on and so forth. I'd probably try to, so for a DCA, I would be interested around that point, between 5 and 6 cents, and I would spread out limit buys around there and just let them sit, if that were my strategy. A DCA, which for some coins it is. Like Mover, somebody's talking about Mover. I know I can't, that's a community coin, so I can't really be super specific, but you could probably interpret what I already have in the charts and snapshot it. But, Mover, you could have targets, just kind of make an X and pick your spot, but you could say, whoa, I want to, dollar cost average way down here on a percentage basis, run the same trick, okay, 60%, whatever, where does it take you? Somewhere under $20. And I would do the same thing for this. Yeah, and those would be my two buy areas depending on what time frame. So I did a very short time frame and a very long time frame. So hopefully you can interpret anything in the middle for what you will. All right, Uno buy target. Let's see here. You're missing Hex Pump. I told you, bro. All right, let's look. Thanks for the super chat, born yesterday. All right, so Hex. You. Well, okay, so born yesterday. I strongly recommend that. Let's see, which one is it? It's the thumbnail with the cat on it. Schroeder's cat, but it just has a cat. It's recent, so it should be. If you go to my channel and just click on videos, it should be the third or fourth one back, something like that. So one with a cat on it. It's the weirder thumbnail. I really suggest you watch that video. It applies perfectly to that, so that in the future, you don't think that that's a pump. I'm trying to help, I promise you. I'm not, I think that it would be a really cool learning moment, and I think it would be compelling to you. I think you'd say, oh, shoot, I see what he means, and therefore I agree that that's not quite a pump. Now, is that tradable? Heck yeah, it is. It doesn't mean you can't make money off of that pump, but from a macro sense, that is definitely not a pump. From a trading standpoint, like I'm in and out of a trade in a week or less, hell yeah. Absolutely, you can. That's a very tradable play that you were staring at here. Very tradable. But on a macro sense, it is technically just another lower high. Now, in that video, you'll see that there's a point where I say, hey, you get your first Lego when you get over the first local high, or you get your first green Lego, that's all it's done. In order to get another green Lego out of all the red Legos it has from this downside, okay, it's mostly red Legos from that video, but it'll make more sense if you watch it. You've only gotten, so you're mostly playing with red Legos, but you want more green ones, right? Bullish versus bearish. You only get to convert a red to a green after you pass the first local high, which is done. You've only converted one red Lego to green, but you still have mostly red Legos. The next green Lego, or the next red Lego that you can convert to green, there are two ways to do it. You either get over the next local high, or you make a higher low. And it hasn't done either. Therefore, it's playing with like way more red Legos than green Legos, I'm telling you. Yeah, watch that video. It'll be really helpful for you. But yes, that is a very tradable bounce. And I would still say my targets are going to be hit. That would be my guess. Could I be wrong? Absolutely. But I would, yeah, on the lower time. So to your defense, though, calling this a pump from a like a day trader or somebody who clicks around with one asset in and out of trades more than twice a week, yes, that would be a pump for low term analysis or low time frames. Absolutely, I would justify what you said. But on a macro sense, absolutely not. Definitely still pretty bearish. All right. But yeah, I like HEX. I really do regret not getting into it at the beginning. When Richard was ranting and raving about, this is how you do it, I'm trying to make it easy, like get your MetaMask, and he would step right through it. Like I'm trying to make it easy. But yeah, I didn't do it. I just couldn't tell if he was sour about Ethereum outperforming all the Bitcoin he had, and he was trying to like get back at crypto by creating a coin and like rug pulling it. I just didn't know. Now I'm not claiming that's why. I'm not making any accusations. In that moment, I just couldn't analyze, and I was scared. But history has proven he has done this project for the benefit of humanity, and I think his true north is that he's trying to help people. And the chart, he did help a lot of people. He created a fantastic product. All right. And again, within this analysis of HEX, zero accusations being met, rather just things that were going on through my mind about 2 years ago when he was talking about this. And I do regret not having gotten it. All right, so it's the pulse chain FOMO pump, bro. FOMO, yeah. I mean, yeah, from a low time frame perspective, that is a pump, sure. However, if you haven't watched that cat, the thumbnail with the cat, I strongly suggest you watch it. This is a perfect example of that. All right. Another community member is asking for MTRG. I think you asked for that last time, so I should have stuff. All right. Wow. It really did hit those wick highs. Huh. Interesting. It looks like MTRG is going to hit the bottom of this box at $2.70 before it really does much of a bounce. That's for a short-term time frame. Now, for a long-term, type of play, I'm trying to buy near a bottom. Well, just go down 60% from current price. It's probably where it's going, $1.35. I mean, you can sometimes, sometimes this little, you can't even see it over there. Let's see here. Move. Right there, that's a little better. This tool right here, okay? Or on a computer, you can just hit Shift. As another VIP in my Discord has taught me. Shift and hold, like, go down, right? But that's the tool as measuring tool. It's very powerful. Yeah, $1.35. So for long-term analysis, trying to buy near a bottom, I would do about $1.35. But for more immediate term stepping in, like a midterm type of trade, I probably wouldn't be interested until $2.70, and then I would be looking specifically to become a seller within a certain amount of time. I would not hold that to try to get into an altcoin season. I would be looking to be a seller within a couple weeks if I were to buy there specifically, or looking to scramble out if it keeps dipping below. I would get out of that trade quickly at a very small loss. All right, so those are the two ways of buying there. You said MTRG and let's see here, and XHV. Huh. Is this the same Haven that I used to follow back in the day? Nope, it's not. Okay. This chart is strange. Huh. So again, realize during Bitcoin's 69K tap, this made a lower high than when Bitcoin made a 64K tap. Therefore, the community, again, part of them were scared out, had less buy pressure, even as there was technically more buy pressure in the market the second round. So part of its community was axed. They didn't come back. So part of the community was axed, didn't come back. Lower high, lower high, lower high. So keep that in mind. Honestly, I would say from a more long-term perspective, it's going to break all-time lows. If this was the beginning of it, I really don't know, but it looks like it's going to bust below there over time. Given that I think Bitcoin's going to go lower over time, I would honestly just draw down the 60. Yes, I would give it $1.10 would be my long-term. I think it'll just go below this line here. But from a long-term aspect, if I zoomed in and went to the 4-hour, so it just got rejected from the 10. Man, this one's really volatile. This is, I don't know if I would try to trade this. I would almost rather swing trade this at key levels. This looks too messy to, and it probably doesn't even have the volume to actually actively trade. But this would be too difficult. So you don't want that much unpredictability in a coin if you're going to trade it. But from a swing trade perspective, this is like a wet dream, right? This would be really fun. Just pick key levels and bam. But it's making lower highs and lower lows. So I'm going to guess that on this very move, there could be bumps along the way, but in this general move, I think it's going to make a lower low also from a mid standpoint, not even a long term, because it's making lower highs and it's making lower lows. It's probably going to continue that trend until the trend is broken. So as of now, the trend is not broken, and I would target. Let me zoom out a little bit. Not quite parallel. All right, let's leave that on the chart. So when you come back on another live show in the near future, we'll see if that's ever hit. That would be my guess. $1.13, roughly in June. Honestly, now that I look at it this way, it's not too crazy unpredictable. Now that I can put this in my mind in a more orderly fashion, but still, I wouldn't try trading this during the day. It's way too chaotic. So volatility equals profitability to a certain point. Too much of a good thing turns bad, even fun. If you have too much fun, well, then you're cutting into the time where you need to be serious and make money and provide or whatever you're supposed to do. too much fun is bad as well. So too much volatility, there are diminishing returns to the point where the returns become negative, and this is maybe one of those coins. So there's a blend between volatility, between volatility and predictability. So let's put a PRD. Volatility plus predictability. There's a certain blend. So if that equals, X or higher, that would be technically too volatile. But if V plus, if there's some secret, formula where this is the X marks the spot. If it's exactly X, volatility plus predictability. If it's exactly X, that's the most profitable coin to trade. It's a hypothetical, right? So it'd be a hypothetical thing. And if it's above that, if those two added together above it, then you actually lose money over time. And then if it's actually below it, so volatility plus predictability is below X, then you're also losing out on some opportunity. And this is the perfect, this is the Goldilocks zone. So Goldilocks zone is for astronomy and macro or cosmology. Cosmology not in hair, but cosmology like the makeup of the universe. It's where planets are in a certain distance from a sun. Going around. All right, so it's like the Goldilocks zone. But this is beyond the Goldilocks zone. So this would be like an ice planet. This would be like Neptune or Uranus. It'd be a little bit too volatile. All right. Okay, and again, I'm ranting on about that for a while because it applies to a lot of the coins you're going to watch elsewhere. So it doesn't just apply to Haven. I think it applies to XRP. XRP is pretty unpredictable and it's very volatile. So, I mean, the makeup of that it's definitely not Goldilocks for day trading. XRP is very hard to trade. Because it's unpredictable and volatile. That's a weird mix. All right. So because of that, technically you would have to probably have absolute value of volatility plus absolute value of predictability because of what I just said. Because this could be negative, so you need the absolute value of it for those formula that I just put in. All right, sorry. Okay, and you also said XH. Oh, I just did XHV. Yep, that would be my target for that. All right, it's Pulsing Fumble Pro. All right, born yesterday. Okay, Flux KDA. So we got Kadena asked for. Is now a good time to ape into weapon? Okay, I'll get weapon here in a second. Flux KDA. It's on Binance? Huh, I thought Flux was a smaller. Oh, wow. Huh. That is different. That's kind of impressive. I'm going to have to look into this. There's no other chart in crypto that looks like this right now. Okay, I am intrigued. I don't know what this is, but I'm going to have to check this out, what this project's about, because this is pretty special. I would still say if Bitcoin really does get into the low 20s, if there is a capitulation, again, it's not guaranteed. I think it's probable at this point, but I would target somewhere around there. This might recover really fast, because obviously the community of buyers is here. I mean, they are holding this crap up. There are people buying this at this level. However, I would probably want to scoop it up at 50 cents. And it'll probably go straight back up. You'd probably be in a huge trade if you can catch it close to 50 cents. If there is a capitulatory event. It's a little bit too stablecoined out to like trade this, so I'm doing more of a long-term hodl buy DCA. So and you can pick a couple levels. Like you don't have to just pick one level to DCA, right? It's actually, you probably want to spread this out. So somewhere between 68 cents and maybe some down, maybe 4 different spots, something like that, between 45 cents and between 68, 45 and 68. Just spread some limit buys, and from a for Pokemon cards only, non-financial advice, that could end up being pretty good pickups. So let's measure that to make sure that actually aligns with what I've been thinking. Yeah, so that's about the 60% range, like what I've been saying for all the other coins. Look how TA works. It's not freaking astrology from, which is, again, it makes me laugh when I say it. But look, the middle of what I just did structurally aligns with what I've been saying is your zone for the percentage. Exact middle. And I didn't even know. It just aligns. Like it for some reason, it just things align. All right. And it works. I'm telling you, it works. Especially when you recognize when you have an edge or not. Yeah, so that would be a pretty good, probably a pretty prime area. Now that I could confirm that with a higher degree of certainty with the percentage, yeah, around 60 cents, 50 to 60 cents would probably be your zone there for a long-term buy. For this Pokemon card only, not any financial advice whatsoever. All right, actually, I might leave those there. There we go. All right, and then you ask for KDA. I mean, I wouldn't be looking for entries right now. Yeah, down here at $1.66. It's gonna go straight down there. I already did an analysis of it. Once it breaks this box, it's going to accelerate very quickly down to this area. So well below $2 is where you're looking for. Being able to trade this on now, an entry for a short, well, I mean, you just kind of missed it. If this is traded on futures, but you didn't say futures position, so yeah, from a long-term buy perspective, yeah, under $2. It's very extremely extraordinarily likely it's gonna hit that box. Wow, and give up pretty much its whole run since September. Interesting. Wow, that is a straight up, straight down type of coin. My goodness. So a little bit bigger run than BPRO had, not by much though. It's also come down 86%. And does that align with going down in total 95 to 97%, which altcoins like to do? They're right at 95. See how that aligns? My structural analysis aligns with my pull down. Just the quick rule of thumb. Altcoins will probably lose 95% of their value from their wick high in a bear market. Structural analysis aligns with a simple tool just like that, magically. Just magic. Does it hit the exact middle? No, but it hits the exact bottom of my box. Why this happens, I don't know, but things align, and when things align, that's when you know you have an edge, because the whole thing about TA or trading is that you want to understand where's most of the money going to be looking at, like where's most of the money trading, right? And I don't care if I think they're wrong, right? But because if I think they're wrong and that's where most of the money is, they're going to be right because of self-fulfilling prophecy. They're going to overpower the other group. It's either buyers or sellers. One will be stronger than the other. Can that change hour per hour? Sure. You can have a green candle, red candle, green candle, red candle. It can change hour per hour, sure. But from a macro sense, when things align, taking that idea of where's most of the money looking, it's going to be around that box. Because multiple things align. Does that make sense? So most of the money will be looking there because there are different reasons to buy there, to become a buyer. All right. It's a similar statement to let the trend be your friend. However, it applies a little bit more specifically in this regard. So where are most people going to step in and be a buyer? All right, and there are multiple reasons for people to look there. All right, BPRO, yeah, let's look at BPRO. It's not a super chat or a community member, but you know what? I feel like looking at BPRO. And again, I do hold this asset. Not very much of it because I'm convinced that holding Tether is a better play. However, right now I do own about a quarter of the BPRO that I want to have. So just a heads up disclaimer, I do own some of this asset. So I will definitely try not to be. I think I don't analyze BPRO with any bias to the upside. So, however, just make sure that you understand I do own some of this. Man, that's a big old triangle she's forming, isn't it? My goodness. That is a massive triangle. That's a big one. That's a big girl. Shoot. In the immediate sense, it looks like it's going to come down to 0.0024. I think it's going to come back to this box, it looks like. That would be your mid and short-term analysis. I think it's going to tag that and want to bounce because a lot of buyers are going to step in there. A lot of people are going to be looking at this level. I mean, it aligns with all this stuff, right? There are going to be tons of people. Could wick a little lower, like down. It could even wick slightly lower than that, but it looks like it's very likely to have a 25%, downturn and hit 0.0023. From a long-term perspective, it's going to be tough to tell. It could come all the way back into this zone of this horizontal of liquidity. That could happen. It could bounce right on the top of all that stuff. Or come to even the middle of that kind of stuff. Let's see here. What would be 60%? 60% hits the middle of that box. If Bitcoin were to go down 43%, altcoins would probably go down 60 to 65%. So it aligns. So that would be around 0.001. Just a little. So this is like all the ones. So this is between 0.001 to 0.00, almost 2. In that area, that would be a longer term drop. Under the assumption Bitcoin really truly does make a 40% downturn from here over time. Not today, not tomorrow. Long-term analysis. All right. Okay. At the bottom of the bear, alts can go. So somebody, okay, so this is, again, not a community member. Sorry, I skipped over. So Michael, I see you, but this is a very important question. So Fleck Brecklin says, at the bottom of the bear, alts can go down 97% from all-time high. Dude, or dudette. A lot more than that. A lot more. The difference between, 97% and 99% is kind of big. They can go down a lot more than 97. Can they go down more than 100%? No. But 97 versus 99, it is a fairly big difference once you map it out. And can they do it? Well, what was YouTube's crypto love child of 2017? It was Cardano. Do I have the Cardano chart with all the price history? Yes, I do. All right, look. Cardano went straight up, hit $1.30 in the bull run, the very end of the bull run. So this got a lot of hype because it had a lot of, it had the biggest funding round. I think it got $1.2 billion of an original funding or something to that effect. It might not have been funding. It might have been that's how many pre-sale tokens were sold, something to that effect. Before it actually came out. So it came out with a lot of hype. YouTube hyped it like crazy, went straight up at the very end of the bull market. I mean, it did this in a month, just absolute ridiculous numbers. And then it went down from wick high, let's try to get it right on it, to wick low. That's 98.75. 0.25% away from 99%. They absolutely can. And I would be so daring to say that especially small alts, small cap alts, will Luna and Atom go down 99%, 97 to 99%? Maybe, if not, probably no. They're a little too strong. They'll hold their weight pretty well against Bitcoin. If Bitcoin only goes down 43%, Luna might actually only go down 55% or 48%, just about the same amount, or even a little less, maybe only 40%. But most altcoins are going to go down from their peak high between, I would say, 90 to 99%. The vast majority of altcoins, when all things are said and done, and within that vast majority, you could end up having a majority go down of altcoins go down 95 to 99%. However, the majority of them are smaller caps because most coins are not big caps, right? There are way more like shitty projects, the projects that don't exist anymore, or whatever, or small caps. So BPRO is a newer small cap, right? It's not a 2017 coin that never survived, and now it's at the bottom, page 20 of CoinMarketCap. So all those will go down 95, 99% as well. In addition to a lot of small caps that still have a good product that just were early risers and early followers like BPRO. It's probably 95, 99, and honestly, I think BPRO's already gone down 95%. It's already hit that target. So yeah, absolutely. Don't make sure that you realize is my coin of interest, is it a low cap? So is the market cap under 50 million? If it is at this point, then I might want to draw down 97% from the all-time high. If I'm dealing with a big cap, well, my target might be 90 to 93% from all-time high. That's where I want to buy it. So large caps will have a smaller fall on a percentage basis than the small caps. I think I said that right. The larger caps will have a smaller fall on a percentage basis than smaller cap tokens. All right. Yeah, that was an important question. All right, let me get to these community members, and I'm going to probably have to wrap this up. All right, BPRO at 0.034, but I'm not sure if that was smart. Well, it depends on what your strategy is. So I have Proxy iView ask, hey, I just bought BPRO at a certain level, 0.003, and I don't know if that was smart. It depends on what you bought it for. So for example, to make yourself feel better, my average entry so far on Mover is probably right here. It's probably about $70. I bought some here, or no, it's 124. Where was it? Yeah, I thought it was going to bounce here. So look at that. So I drew a horse. So I bought a little bit here. I really thought it was going to bounce there, and it did not. It just fell straight freaking through. But and I bought some here, like somewhere around to this point under this line, and I bought some here, and then my average entry is probably around $70. And look where it is now. Like I'm about 45% down on that. And so that's why I say it depends on. And am I mad about that? Absolutely not. I'm dollar cost averaging. I want a certain amount of Mover, and I know that over time I'll just use this much dollars or Tether to buy Mover at that point, and I'll just keep dollar cost averaging on the time axis. Wherever it is on that time axis, that's where I dollar cost. Or if I don't want to use time axis, my next goal would be buy at the bottom of the box, closer to $20. So my dollar cost is going to be lower. So if you're using that BPRO buy at 0.00324, I think is what you asked, was that smart for dollar cost average? Yeah, as long as you didn't put all your money on it. Yeah, if you're slowly buying BPRO, you want to buy between 0.00324 and 0.001. If that's your goal, well then you just started down the path of your goal. That's where I want to buy. That's my zone. So just make sure you know your zone, and if you have a clear definition of what you want out of that purchase, then you should know the answer for yourself. Now, given that you asked that, it means that maybe you didn't have a plan for it, or you expected it to bounce and you wanted to sell, or you thought it's altcoin season. In that case, yeah, it probably wasn't the best trade, but there's always another trade. And is it too late to wiggle out of it now? I mean, I don't know. I don't want to go too far into this, but that would be more of like a Discord question where you're on the microphone. Oh, 324. Oh, so yeah, you're actually still Pokemon cards only. Pressure's down, man. I don't know. I would, if I had bought at 0.0034, I would make, or 00324, I would make for darn sure that I set my stops. I would put stops on this on the spot trade under that wick right there. So under that 5-minute wick is 00323. So you'll only be at a tiny loss if you're stopped out. So you bought at 0.00234. That would be, yeah, 0.25%. I would definitely be fully out of the trade right there at that wick. 0.00322. Oh shoot, you can't see the screen. I know some of you cracked up last time. Here we go. So under this wick, I would be out of that trade, and I would definitely be setting my stops for this Pokemon card. This is not financial advice. That's how I would play this. If my stops are not hit and it keeps going up, then you have two options. And this is something that we do heavily on Discord. That's why I have different team leaders with different styles. So I have one team leader who uses what I'm about to show you a lot more frequently than others, including myself, I just move the stops up. So just keep moving. So as price goes up, I just keep moving my stops up and up and up and up. And as price separates, I keep my stop. I just delete it and move it up. And then when it finally goes down, that's where I take my profits. There are a couple strategies. Or you could say, okay, since I bought there and, people I follow like Kosa is thinking bearish, I want to be out somewhere around a horizontal. So I want to sell here. I'm just going to get out. And honestly, this would be more my style. I'm more of an impatient person. Patience is not among my natural virtues, and I would probably be out at 0.00342, 342. I'd probably want to be out there, so I can just say, "Whew, okay, all right, I'll wait for an entry." And those would be my two. So so what you just asked is how some of the conversations, for example, on Discord go down. Like, hey, I bought here. What should I do at this time? It's people learning how to trade who are going like on the money type of line stuff. And although the questions about what do I do now in a bad trade are greatly reducing, I'm mostly getting quite
Give me that thumbs up.
Sorry. Thumbs up. Thumbs up. I didn't mean to hit that. Kind of scared me actually. But yeah, do take a quick second to hit the like button for all the people still here. But a lot of the questions I'm getting now are more in regard to how do I take profit in this trade that I'm in profit now? Should I just get out now, or So the questions over time have gotten more in line of profit taking as opposed to how do I deal with this risk management situation. All right, I'm gonna scan down and make sure I'm not missing any super chats and make sure I didn't ignore too many community members, because part of the package is I get to answer your question. All right, ape into weapon. Shoot. Okay, Harrison. So I got Harrison. All right, I'll get. Harrison, this is like your third question. All right, so I don't feel too bad about having skipped over you too much. So ape. Ape into weapon. So ape in time to ape in weapon. Weapon X. Is this the right ticker? I don't even know. No way. No, that's chasing green candles. I think that's a joke. I think that was a joke. Wet. Or ape. You're talking about ape? I wouldn't ape into that either. Oh my gosh, that lost. Oh, I'm on the 5-minute time frame. Well, I mean, still kind of, wow, straight up, straight down. Yeah, I'm not for sure. Yeah, I would say no for both. For both of these, I would not ape into either of those. All right, but I don't know if you're joking, Harrison, on that second question. Just got B Pro. Okay, good. Did you already chart Trias? Michael D. Hey, thanks for being here, Mike. No, I haven't. I will do it real fast, and then I'm gonna try wrap it up. I think there's one more community member question down below. Have not looked at Trias, so it's broken below this 45-degree angle, and then come up and used it as resistance. So it's going to make a lower low. Its next pit stop is right here. $3, $3.06, 306 it's very likely next bounce point for a shorter term trade, not a long term hodl position necessarily. That would be likely where you'd get some type of bounce. Does bounce mean full on recovery bull market? No. Bounce could mean it could turn into a big bounce that ends up falling and going below $3. Bounce just means you intend to sell into the rally because it's probably going to come back down or even lower. That would be my definition of bounce, as opposed to recovery, which means it won't come all the way down and lower. All right, $3.06 kind of target for that. 305, 306. Pretty simple analysis on that. Trias is honestly not too crazy difficult to chart, especially for a swing trade position, because I don't know, they're just so many. The key levels are pretty well set, and I think buyers step in pretty much altogether for a self-fulfilling prophecy on when bounces will be, because there's so little to look at. The chart is well defined. It's very predictable, which is a good thing. You want predictability and volatility, which honestly Trias has. It's pretty volatile and it's pretty predictable as well. Now, trading this on spot trade, because you can only buy lows and sell highs, you can't make money off shorting. It is a little tougher, but there are the opportunities for that. It's harder to trade on spot when things are down. It's simply put, it's a lot harder because your money is going up for less time than in an uptrend when you're determining on when to take profits, and you can't really make money to the downside. You're holding tether, waiting for a lower entry. All right, so you're sitting on the sidelines more often in spot trades, is what I'm trying to say. All right, let's look at. Did not look at Trias. Can you look at Doge? Yeah, I'll look at Dogecoin and then Theta. Harrison, I think you mean Theta. You put Theta. But I'll look at Doge. I think I have Doge up here on my saved list. Probably doesn't deserve to be there, but this only went up because somebody tweeted about it. Lower highs and lower lows. It's pretty clearly targeting something to that effect. It looks like its next area of interest will be 8 cents. 8.1 cents. Looks like it's going to target that. Blam. And I'll actually leave this on my chart. See how well that worked out. There you go. That's a very, very likely target, because this is honestly pretty predictable right now. It's a pretty clean chart to the downside. Now, is it predictable when you zoom into the 5-minute candles? I don't know. It might actually be pretty chaotic, which that actually looks pretty hard to trade on a short-term time frame. That looks pretty damn challenging to trade, actually. It might be a little too volatile for that stuff. Wow, look at that. Wow, went straight up to the origin line, then came back down. Holy cow, that's ridiculous. Why would something like that happen? Yeah, this is like very difficult to trade. Oh my goodness. 32% in about a minute. Holy cow. In an hour or so. That's too much. Yeah, I would say 8.1 cents would be my next target. And then somebody asked about thought. So I'll see if, oh yeah, I just got out of it. Not a big, yeah, okay, cool. So thought, did you mean to say thoughta? Okay, so it auto corrects it to theta. All right, I'll do this on KuCoin. What was I thinking here? So it's falling back into this trading channel. $1.76. That's the first area where you might be able to do a playable bounce. $1.76. And again, I've been relying. I mean, in the choppy market, these trading channels work. Now, on whether or not a certain line is going to end up being as resistance, or if price chugs right through, that's where indicators like EMAs and all the things I traditionally use, and I haven't used much in today's analyses, that's where those are coming into play. So I'm actually, for Discord, or if I were trading, I would be mixing these types of things. But honestly, using these trading channels that I've been begging folks, pause the screen and make your same lines. They've been working really, really well. And again, supplementing that with more indicators, it helps you get a better idea of whether different levels will be broken or end up being a resistance point. All right, I don't think I know my face is big, but I think I need to wrap this up. So yeah, thanks everybody for being here. And again, Tuesdays and Thursdays at 10:30. And if I ever want to change the times, you can just make sure you follow me on Twitter at Costas Verdes with the number 2. I'll let you know, hey, I got to change the times for whatever reason. And we'll see you next time.